Hello, and welcome to the Jake Bernstein Archives. The information provided in this episode is for educational purposes only. There is a risk of loss in all trading and investing. The results shown are hypothetical and should not be construed as investment advice. And now, over to you, Jake.
Greetings, everyone. This is Jake Bernstein. Thanks for coming to listen to me. I appreciate it. I'm talking today from Santa Cruz Mountains, California, in my home office, and I hope to bring you enjoyable, educational, and meaningful information. Now that I've been trading for what will be 58 years, people in the business are beginning to think that maybe Jake knows what he's talking about. And they come to him with opportunities to teach, opportunities to put on seminars and webinars, and charge money for them. But my true interest today, and in many of the other things I do for the foundation, is purely educational and strictly designed to bring you the best we can in terms of opportunities, in terms of price patterns, in terms of time patterns, and in terms of procedures. Certainly we don't have all the information available to us that counts, but we try to do everything that can be counted that counts. So as Albert Einstein said, and certainly I'm no Albert Einstein, that's for sure, we want to focus on meaningful opportunities and in meaningful relationships so that we don't waste our time going down the rabbit hole. And going down the rabbit hole when it comes to cycles is a very common phenomenon because cycles can be very seductive. You can look at a chart and say, that is a beautiful cycle. But the next question is, what can I do with that cycle? Can I help bring about less famine in the world? Can I predict the weather? Can I predict opportunities to make money in investments? What good is the cycle if it's not pragmatic? But then again, there are those who say, the cycle is a thing of great beauty in and of itself. We should be happy and rejoice that there are such things as cycles that we can use in our work and to improve humankind. As Edward R. Dewey, Foundation for the Study of Cycles founder, said many times over, cycles are the mysterious forces that trigger events. So let me give you some direction about what I'm going to be taking here. My goal in these sessions that the Foundation has graced me with the opportunity to do is, number one, to elucidate, to bring clarity. Number two, to educate, which is not to say that I believe my methodologies are the best there are. Certainly they've worked very nicely for me and given me an opportunity to have good prosperity, to raise a family, put them all through school, pay for their education, pay for their upbringing, and many, many other fine things that life can bring, to which I owe cycles a great gratitude. I would like to take this opportunity, or these opportunities, if they have me back, to share with you some of the things that I have learned, not only about cycles and about trading, but about how the human being fits into that equation. And now that is especially true given the rise and popularity of artificial intelligence. And speaking of artificial intelligence, it's interesting to note that even though I started talking about AI 25 years ago in my weekly reports, the lot of the average trader has not changed very much. The average trader is still, all in all, a net loser, not necessarily because of bad methodology, but because of bad procedures. But we'll talk about all that. My hope is that your feedback to me will be positive and say to me that I'm making a positive change in your life, giving you an opportunity to improve things that may have been holding you back, so that if you've been using cycles or patterns in your trading and not being successful, part of my goal is to turn that around and show you how you can use these powerful tools to be successful. Or if you are successful, to show you how to use my tools to improve your success. Or for you to decide, after all, this is too complicated, too risky, or too unappealing to you. You have no interest in it and you decide you don't want to do it, and you're going to spend your time more wisely somewhere else. So whatever you get from these sessions, whether they're meaningfully rich or meaningfully minor, as long as they're meaningful in some sense, that would make me happy. So how are we going to begin? Let's begin with this. Not everything that can be counted counts. Not everything that counts can be counted. Very simple saying by Albert Einstein, and as I said before, I'm no Albert Einstein, but I do know this. There is so much available in the way of information these days that we have to be careful how we use that information and how we assign relevance to that information, because after all, the most precious commodity and most precious asset in life is life itself. It's time and life. We need to use our time wisely. Why spend my time day trading 40 or 50 times, even with a good pattern, if I can achieve the same result in satisfaction and in profitability over the course of 6 months, being involved maybe 3 or 4 times in making a decision? So the choice on how I use my time is mine and mine alone. And there are more intelligent ways to do things. And of course, all of that is age-related. Younger traders will be glad to spend their time chasing things down the rabbit hole. Older traders, however, want to have return on investment, return on time, and want to save and use that most precious commodity, time, in the most intelligent and efficient way possible. Let's talk about the new trader's dilemma. 90% plus of most traders who day trade lose money. Why? There's probably 15 to 20 good reasons for that, and I will give you those reasons. But my goal here is to combine the stronger parts of trading and investing with the stronger aspects of patterns or cycles. In the process of doing what we do, you may have to sit through some well-worn aphorisms. You may be able to sit through this and say, yes, I've heard it before. You need to have discipline as a trader. You need to have discipline as an investor. You need to have rules and all the rest of that stuff you've heard a million times before. However, perhaps I can repeat that to you in a way that's more meaningful or more productive. Let's first turn to the trader's dilemma. You're new to trading. You've heard from a neighbor that they're making money trading, and you want to do it yourself. So nowadays, the answer to all of those questions is go to the internet. The internet will be a very good place for you to find information. Type in, teach me how to trade profitably. A very simple request. Within a matter of 0.37 seconds, that's right, 0.37 seconds, you get about 265 million results. And by results, I mean opportunities. Someone trying to sell you something. That's very important, because there are millions of things to buy. And as you will find out, if you have not already found out, most of it is worthless. So therefore, you have to decide what is of value and what is of not value, what is worthless, what is time spent down the rabbit hole. Fortunately, we have something that we didn't have many years ago, and that's a computer. So if you have a methodology, whether it's based on cycles or patterns or seasonals, you can take that information to the computer, and if the algorithms, the rules are clearly stated, in a matter of minutes, the computer will let you know, is your strategy effective? Does it have potential? Can it bring you results? Is it too difficult for you to do? Is it involved to the extent that you can't afford to do it, and so forth? All of that easily answered by computer. So the first problem is this. Most investors, whether they use cycles or not, are not able to backtest anything, nor for that matter do many of them know that you can backtest things. So one of the most important things is it's always a good idea to know if what you're doing works. And I say that tongue-in-cheek because most people don't. So my goal is here to be very clear. Number one, to show you some of the tools that I've developed over time and how they work in combination with cyclical and seasonal patterns. Second, to show you some cyclical and seasonal patterns which are likely to work for you by virtue of their repetitive abilities, and to show you how I integrate them in my work. My goal is not to make you a Jake clone. My goal is to help you make your own clone yourself, and do things the right way that will facilitate the process, whether the process you're looking for is designed to bring you to an educational goal, to a materialistic or pragmatic goal, or to a combination. Either way is very specific and clear and rules-based, which is what I pride myself on doing. During the process of this class, or this course, or this lecture, or whatever, I may reference some of my historical experiences, some of which have been hysterical as well as historical, but the goal is to teach you. I welcome your feedback, good, bad, ugly, indifferent, because I'm a seeker of the truth in what I do. Only by being honest with yourself, and by me being honest with you, can you achieve meaningful results. Because if you're constantly looking over your shoulder wondering, is this true? Is this real? Is this statistically, mathematically, scientifically valid? If you need to wonder about any of those things, you're going down a bad place. You want to have confidence because confidence will bring you discipline. Discipline will bring you more profits. More profits will bring you more confidence. And more confidence will make you happy, and you'll continue to be joyful in your work, which is very important as well. So I may go off on a few tangents now and then. Forgive me for that. The greatest value for your money anywhere on the internet is the foundation. Foundation, not for profit, but interested in disseminating solid, valuable, scientifically proven information. No guarantees, but a solid education. So, for example, when somebody says to me, Japanese yen, what am I thinking? Am I thinking Tokyo? Am I thinking the Japanese banking system? Am I thinking the Japanese currency rate? I'm thinking of a chart. I see that chart in my mind's eye. I see the Japanese yen versus US dollar cycle. I will show it to you. So, as a trader, I'm thinking differently and I'm visualizing differently, and that makes a big difference in what you're doing as an investor as well. But before I get too far off tangent, let me go to the next slide. And by the way, should you have questions, send them to the foundation. I will answer them as best I can. I don't claim to be perfect in what I do, but I do believe that my work and my techniques or methodologies are way ahead of what most people do. A little bit about me. I'm not going to spend too much time on this. I'm just going to talk to you a little bit about it. And you'll see that even at my very tender age of 79, I have achieved some degree of notoriety. And during the process, I've written many books. In fact, I wrote the 5 best-selling books on day trading for McGraw-Hill. So why am I not talking to you about day trading? Day trading ain't what it used to be. There was a time when day traders would make money. They could make money during the day, of course, maximize that money by increasing their position size and so forth. But during those days in the 1980s, things were different. The markets moved slower. Traders moved slower. Everything was different. There was a trading floor. But now, 95% of everything is electronic. Things move very quickly. News is disseminated in a matter of seconds. News will be all over the world. And the machines are taking over. Artificial intelligence, which I warned about for many years before it actually came to fruition, has taken over. Now, your main competitor is, guess what? The machine. It's man against machine, woman against machine. And guess what? Woman against machine and man against machine, machine will win most of the time. Therefore, we have to learn how to adjust. And that is either by competing with the machines, by being one step ahead of them, or by not competing with the machines at all and letting them have their domain. If all you know how to do is trade, and if all you know how to do is day trade, it's going to be doubly problematic because the machines will take over everything. I want to talk to you today about the pillars of success, because trading and investing are not all there is to it. There are several pillars of success, which I'm going to detail for you today. Number 1, methodology. You need to have the right methodology. Whether that methodology is based on moving averages, which are notoriously poor predictors, or cycles or seasonals, which are notoriously good predictors, you need to have the right methodology. But the right methodology doesn't necessarily mean the most effective methodology. It means the methodology that is within the capability of what you do. You need to know that you can implement your methodology time-wise, rule-wise, and correctly, so that even the right methodology will not be effective for you if it's not implemented properly. And let's be clear what I mean by methodology. Trading system, trading strategy, seasonality in terms of the exact entry and exit date, stop loss, trading stop loss. These are all part of the same methodology. If you don't have those pieces of the puzzle, you don't have a methodology. So that's very important. And by the way, these methodologies, as you know, can go by different names. Elliott wave, candlesticks, Heikin-Ashi, moving average crossovers, the box method, trailing stop method, regression, and so forth. Let's go to the next methodology, the next on our list. Philosophy. Now, I'm not suggesting that we become philosophers. I'm not suggesting that there is a specific philosophy of trading. I'm not suggesting to you that in order to trade, you have to have the right philosophy. But I do believe that philosophy can influence what you're thinking. Let me give you an example. I have 3 wonderful children, 2 of whom are fluent in Mandarin. They spend many years in China, and when they come back, they're always talking about Chinese idiomatic expressions and Chinese sayings. Their favorite one is, and I do butcher the Mandarin, please forgive me, Mei Wei Shen Ma, Mei Wei Shen Ma, which means there is no why, W-H-Y, there is no why. Why is that important? Because there is no why. In other words, don't ask why. As a trader, you're just but to sell and buy. Don't ask why things happen. Things happen. Sometimes there are reasons. Sometimes we know the reasons. Sometimes we don't. But as a trader, I have learned very specifically never to ask why. Why is the price of gold going up? Why is the price of silver going up? Why is the price of such and such going down? Those are all ultimately a function of economics. You could easily say supply and demand, and you'd be right, but that would not necessarily satisfy your need to understand why. And as a trader or as an investor, the more you think about why, the less you're going to be involved in how and when and what. If you ask the question why, and you're looking for a fundamental answer, you can always find that answer after the fact. However, finding the answer before the fact is the most important thing. So your philosophy is important. Furthermore, briefly about philosophy, I believe in the philosophy of giving back. I believe in the philosophy of sharing. I believe in the philosophy of no child hungry. But that will not influence my trading except for the distribution of my profits, which I'm always happy to share with those in need. And let me say at the outset, I am not a Republican. I'm not a Democrat. I'm not a middle-of-the-roader. I'm not a social democrat. I'm not a born again. I'm not a MAGA. My pronouns are he and him, and all of those things. The bottom line is this. In terms of political orientation, I'm apolitical, and you will never know my politics unless I tell you, because these days, as you know, it's dangerous to have a political affiliation that you discuss openly. What I do with my time and my vote and my orientation philosophically is mine. We live in a world that's very strange in terms of extremes. What justifies a football player earning $10 million a year on a 6-year contract as opposed to children going hungry in a world of plenty and in a world of excess? That would be ordinarily thought of as a socialist or communist view, but it's only one of the things that I have as an opinion and a question. But again, I don't make decisions for trading on politics, nor do I express my political points of view, because they're mine alone. Let's go to the next point. Psychology. People will tell you there is a psychology of trading. What exactly is the psychology of trading? Is it your trading behavior? Is it how trading affects you psychologically, emotionally? Does it make you nervous? Does it cause you to lose sleep? Or is your psychology different than that? By which I mean, do you believe that the markets are unfair, that some traders have a psychological advantage over others? Regardless, I've rejected the term psychology when it comes to trading and investing, and I'll tell you why. The first book I ever wrote was entitled The Investor's Quotient. The Investor's Quotient was a very good selling book for John Wiley and Sons, and continues to sell today, to this very day. However, I no longer believe there is such a thing as psychology of trading. There is the behavior of trading, because I believe that if you take care of the behavioral aspects of trading, it will automatically take care of the psychology of trading, or in other words, the internal aspect of trading. Very important. Let's go to the next, and we'll be talking about these in detail in further sessions. Again, as I say, if they have me back. Technology. Are you using the right technology to achieve the results you want, either as a technical analyst, or as a trader, or as a cycles analyst? In other words, if you don't have the right technology to achieve the results you want, this will not work for you. You can't backtest a trading strategy if you don't have the right software and the right hardware. You can't execute trades quickly and efficiently and save that time edge for yourself unless you have the right technology to do it, whether that's a high-speed internet line or trading application software or charting software. Super important. Now, the road is open to artificial intelligence technology, and you will be needing that if you don't already use it. Get ready, because you will need it. Structure. What do I mean by structure? Structure is a trading model. In other words, the model that I call setup, trigger, and follow through, which means setup as a pattern, which would be a cycle or a seasonal. Trigger means, yes, I have a timing tool that tells me when that pattern is about to repeat. And 3, I'm going to manage that pattern, that position that I'm in, by limiting the loss and maximizing the profit. So therefore, my structure consists of 3 aspects: setup, trigger, and follow through. During the course of my discussions with you, I will give examples. Many of them will be setups, some of them will be triggers, some of them will be follow through, and some of them will be all 3 aspects combined. As an example, if we look at the cyclical behavior of the Japanese yen, you will find that on the big picture, there has been a repetitive cyclical pattern in the Japanese yen versus the US dollar of from 7 to 8 years in duration. The exact timing of this pattern is nothing short of phenomenal, because it seems that virtually every time the pattern is due to change direction, in other words, the cycle is due to bottom or due to top, a news event or fundamental event affects the markets dramatically and seems to cause that turn. So, as Edward R. Dewey said, cycles are the mysterious forces that trigger events. Right now, these huge, dramatic record-making moves up in gold, silver, platinum, copper, and palladium were all positioned cyclically to occur as they did. And therefore, those of us who track cycles and use the right structure were not surprised by these moves. We're not unprepared, but we're prepared by virtue of our attention to the combination of timing, cycles, and patterns. And that's what I call market structure. But bear in mind, none of these methodologies, structures, philosophies, psychologies, or technologies would be of any value whatsoever if they were not algorithmically based, if they could not be back-tested, and most certainly if they could not be structured and implemented the right way. Next, we've got reality and honesty. And these, although they come at the bottom of the list, are actually the most important. Because if you're not honest with yourself, if you're not dealing with reality, you will have nothing. The very famous Pyotr Ouspensky, the Russian philosopher, had a very important underpinning to his work. And his contention was that every day we lie to ourselves more than to anyone else, that the most dishonest person to yourself is you. Why does he say that? He says that because it's true. You look in the mirror, you like what you see, even though it's not the way it should be. You believe that certain things exist in your life, certain relationships, certain situations, certain outcomes. But in fact, you're fooling yourself in many cases, because what you believe is happening in your life is really not happening, but rather a puffed up version, a made up version of what's really happening. You don't face the truth. You don't look in the mirror and say to yourself, my understanding of cycles absolutely sucks. My timing is horrible. I have missed the major moves in these markets, and yet I knew they were happening, but I lied to myself. I lied to myself by thinking I was too good or not good enough, So therefore, these two reality, be realistic about what you can achieve as a trader or investor. Be realistic about what a cycle is, and be honest with yourself and say, I have not been a good trader, I have not been a good investor, if that's the truth, and therefore this will be the first opportunity for you to change, because you can't change until you face the reality and honesty of what's happening. I'm not here to give you a sermon, but I am here to share with you where I was many years ago. Let's look at one more thing before we run out of time. And you can read this while I'm talking. Many years ago, when I first started trading, in the summer of 1967, we would keep our charts on graph paper with a sharp mechanical pencil and a very good, high-quality straight ruler. Those were our technological tools. At that time, the trader's dream was, if we could just find a computer, a mechanical method, a machine that keeps these charts for us, we would have so much more free time to pursue our lives. And so, over the years, along comes the computer. The computer took away a lot of work effort from us, but then we said, if we could find faster and better computers, we could get these charts done more quickly. And so, along came faster computers. Then traders said, well, that's good, but here's the problem. We're not making as much money as we should. We need to pay less commissions. So as time evolved and competition got higher and higher, the price of commissions went down. And as the price of commissions went down, people still found they were not making money. So they said, what we need is this. We need faster, better price executions. If we could just get our orders filled in a matter of 1 or 2 seconds, the way professional traders on the floor do, we would make more money. So along came faster executions, faster connection lines, faster order entry, and traders still didn't make as much money as they could. Once we got those faster price executions, we decided, here's the problem. We need to pay brokers less commission. And so, in some cases, brokers went to zero commission and simply made money by trading against their clients or by being market makers. So then, traders said, we're still not making money. Here's what we need to do. We need to get artificial intelligence to make our trades for us and to determine what to do in terms of trading strategies. So we developed artificial intelligence. Artificial intelligence is now, of course, a two-edged sword. On the one hand, artificial intelligence can giveth, and on the other hand, it can taketh away. Because now people are saying it's going to be dangerous. Artificial intelligence has the ability to destroy all humankind. So that leaves traders with another excuse to not trade or to trade poorly. But then the worst excuse of all is this. Traders find that competing with machines is very difficult. It's far easier for a machine to predict what's going to happen to prices in the next 3 seconds than it is to predict in the next 3 hours. So we find computers trading massive positions, huge positions, for very small moves and making billions of dollars at it, while the small trader can not only not afford the technology to generate those trading opportunities, but cannot find the opportunity to implement the trades with sufficient size or scale to make it worthwhile. So there's another problem for you. And there's another problem coming as well. And imagine this. Several weeks ago, I had gone to the internet to look up some definitions. I asked for a definition. It gave it to me, and I looked at the words, and they seemed to be very familiar to me. I did some further research, did some more reading, and lo and behold, I discovered these words, these sentences, which the computer had given me through the AI model I was using, were actually mine. They were lifted verbatim straight out of one of my books. I did some research and discovered there's actually a lawsuit. In case you don't already know this, there's a huge lawsuit going on now between authors and artificial intelligence developers. They've taken all of this information from the internet and used it to run their engines, their GAI, General Artificial Intelligence engines, or generative AI, and not given credit, either verbally, in written form, or most important, financially, to us authors. So as the author of 45 books, from which many things were lifted in order to develop that artificial intelligence, I'm certainly pissed off and want my share as well. So there is a big class action lawsuit which you'll be hearing about. But if you're an author and you think that something has been stolen from you, there are some law firms that are handling these cases. One of them is called Copyright Hero or something of that nature. But remember that in most of these cases, the lawyers will take some huge fees, but you may get something out of it if you feel you've been treated unfairly. But let's go forward. So, for all of these reasons, and for all of the reasons cited for Cycles and Cycles Foundation, the ability to find meaningful cycles is not open to the general public because they don't have the computing power. The Foundation, through the hard work of Richard Smith and Lars von Tienen, have developed a number of cycles methodologies to help you find all of the relevant cycles in a particular market. But that's a whole other story, and I won't advertise that. That's up to them. The important thing is this. Number one, I come here today to share with you important information that will help you, I hope, in your investing and trading. Number two, I provide this to you gratis in the hope that you will use it. I did not pay anyone to let me speak here today, nor am I being paid for this. I'm doing this in order to give back to a business and a foundation that has made a serious difference in a positive way in my life, as well as in the lives of my family and children. Number three, I want to show you process. Everything that I do in the way of investing and trading is based on a process. And during subsequent talks, I will discuss some of these processes with you and see if they can be of value in what you're doing. I repeat, as I did before, they are not perfect. They are not surefire. They are not guaranteed ways to get riches. However, they are procedural and effective. And this is the most important thing I can tell you today. If you keep a record of what you do, step by step, in every detail, for which, by the way, artificial intelligence is perfect. If you keep that record, learn from everything that you do. So even though the popular expression for many years has been, learn from every mistake, it's a lesson. The correct answer is this. Learn from your profits as well as your losses. So traders too often ignore their profitable opportunities. They ignore what they did that was right and focus too much on what they did that was wrong. Think about that. When you make a trade or an investment, ask yourself the question, what did I do that's right? What did I do that made me money? If you don't have the answer to that, then your record keeping is not good or sufficient. Develop a good trading record. Keep everything in it no matter what, even if you think it's not important, how you felt at the time, what you were thinking at the time, what happened and so forth, and you will help your success, bottom line. So let me review one more thing. Assuming the foundation lets me do this again, which I'm fairly confident they will, remember this. Set your goals clearly. Determine those goals in writing. Refer to those goals very often. And look at some of the tools that I provided you with today, especially the section about technology and structure, and being honest with yourself. Write me if I can be of assistance. Apologies for the voice of an old man. I'm working on improving it, but I will tell you that even though my voice may not be good, my ideas are very excellent. Use them, don't abuse them, and they will work for you. Thank you for the foundation. Thank you to the foundation, and I'm wishing everybody a Happy New Year.
Cycles matter because they show us the future. Nothing else shows us a future path. Nothing that I've ever found in over 60 years of doing this.
The foundation is bigger than markets, right? It started out bigger than markets. It's still bigger than markets. It's bigger than us.
There is no such thing as a black swan. It is merely a cycle that was not forecast or anticipated.
To me, it's huge. If I can get a glimpse of the future, just a little bit of the future, I'm way ahead.
I think that the Foundation for the Study of Cycles has a role to play in both bringing technology to the world, but also really emphasizing agency and human agency.